This conference will now be recorded.
Good evening, ladies and gentlemen. This is Crudosay Trading Frank. It's approximately 8:40 p.m. on April 8th, 2020, Easter week. We have Good Friday coming up on the 10th, and of course Easter Sunday on the 12th. Good evening and welcome. This is a strategic midweek webinar that will be uploaded to the YouTube channel for viewing by all of the members and anyone out there with the internet connection who wants to understand the dynamics of the U.S. financial markets. More importantly, some absolutely precise, predictive, please, somebody please mute the mic, please. Predictive analytics, in simple English, that means we're telling you what the markets will do before they do. And twist and turn, that's where the markets go. This has happened over and over and over again on my service. And I will stand by it for people who have been with me for many years, like some people who are here right now and a lot of new members, have seen this happen over and over again, and especially from extreme tops and from extreme bottoms. There are certain mathematical and technical tools one needs to use, and I provide it all and I show it. Now, how you manage it how you drive through those twists and turns is something called position management, trade management, and that's the hard part. That part has a lot to do with your mental philosophy. That part has to do with the fact that how skillful you are, and most importantly, how eager you are to learn those skills. It's really as simple as that. So for all new members who are listening to this, take it very, very seriously. You can have the best trade in the world and still make nothing or lose money. That's trading. That's trading. Full disclosure, this is purely for financial education, not for any solicitation or advice. So getting back to it, I want you guys to take a good look at this chart here. This was back in 2013 when I put it out there. This is very old. This is before I even started my service. Okay? And this is the cycle, the behavioral cycle of the market. That is what happens when this is what markets do on a behavioral basis. The tops, the bottoms, and where we are. Give me 30 seconds. I have to let two of my dogs in from the patio. They're enjoying the fresh air out there. And while you guys take a look at this, because I will ask a quick question on this. Okay, I'm back. So the question I ask all of you is, where do you think on this behavioral cycle? Because this is what markets do. All right? We are at right now. Somebody step up and answer.
And Frank, can you just give us a context of like the time frame? Are you talking like
I am not
within
talking about
weeks or?
time frame. I'm just saying, like, at
Thrill.
what point of the of the behavioral cycle are we here?
Thrill.
And remember, this is from 2013. So, but this is exactly what markets do, year over year over year over year. Okay, it starts off with, let me explain how this works, especially for the newer members. It starts off with real optimism, like, oh my God, everything's going to go a lot higher. Then it's excitement, like, wow, look at this. This was happening last year. Okay, when we're hitting new highs, and I told you we're going to hit new highs and we're going to overshoot. People are, oh, we'll never cross S&P 2000. Yeah, right. We crossed 2200. Then we crossed 3000. Then we went to 3400. And that's what we call euphoria. So this is the point where most traders come in. This is the point where most traders come in, where the thrill and excitement, oh, I should be in the stock market. Look at this. It's so easy to make money, because human beings are genetically wired to make easy money, except money's never easy. When was the last time you walked over to a guy on the street, hey, dude, give me 5,000 bucks? Okay? So either he's going to smack you on the head, put you down, or he's just going to say, you freaking crazy? Get back in the loony bin. So this is the part that most people come in. Then all of a sudden the markets this is exactly what the markets do. Then all of a sudden, the markets basically go boom, down. You're like, oh, yeah, maybe something's going on. Yeah, I'll you know, because they came in here. They were never here. Okay, they were never here. So we're going to get to it. And then the markets go down more. So it's denial. Like, oh boy. And these are the people who never look at charts. These are people who never were at Clueless Say Trading. These are the majority of investors and even Wall Street, so-called big shot analysts, who are dead wrong 90% of the times, as you guys can see clearly over and over again. Yet they get the biggest media coverage, and it doesn't matter what stripes, colors, political affiliations they are. They're all the same. Okay? And denial. Then there comes fear. Like, oh boy. Then comes desperation. Oh shit, we're going to sell everything. Oh no, maybe no. Then panic. This is exactly what happened within the past month and the past 2 weeks. Then complete panic. Then capitulation, where you just want to sell everything, never look at the stock market. Never. It's over. Big depression. Doesn't matter what technical levels we're going to bounce off from. I told you we're going to bounce off for 2200. We went to 2178 on the S&P 500. So complete capitulation. Doesn't matter if they want to buy some SPY puts, nothing is like nothing, okay? Then comes despondency, which in simple English means complete despair. Listen to my videos from last week, the week prior, and especially last Sundays. Complete despair. And the webinar prior to that. Look, I don't make things up. All these years of doing this has put, I believe, strands of wisdom, okay, in my head, that I can read a trader through the phone, through social media better than their, than they could, even if they go to a psychologist, they wouldn't know what kind of trader they are. Okay? Better than their buddies. I can feel their fear. I know the excuses they make to make themselves feel okay. All the money they're not making so that there's always a next time. Sure, there's a next time, but most of the next times don't come because the next time comes and you don't act. This is called behavioral finance, ladies and gentlemen. One of the most critical components of making money in the stock markets or in any investment, but primarily the stock market, which I understand better than most people out there. So complete despondency, that's it. Won't touch anything. So I do these trader polls quickly. Some people answer, some people don't. Some people are just too scared to answer. In the meantime, we're making money. Think I make these things up? So then comes depression as the markets are turning. Oh boy, this is it. I just bought something. Oh, and it didn't work out in 3 hours. So what? I talked about it in my previous webinars called recency bias. Like everything that's happening right now is everything that's going to happen tomorrow? Yeah, really right. And especially with the advent and the arrival many, many years ago of high-frequency trading, super fast computers known as algorithmic high-frequency trading, black box machines, which are running the market back and forth. And we've talked about this extensively, as you all know by now. I don't want to repeat myself. These things happen faster and faster. In the meantime, the markets are turning. Depression. And then comes hope. Then comes relief. Then comes optimism back here again. So where do you think, now that I've given a quick framework on that, I'm going to ask one by one, starting off, or anybody can step in. This is not a roll call deal. Where do you think we are right now?
Hope.
Yeah, let's say hope.
I agree. Hope.
Go ahead. There are other
I'm
people.
thinking thrill.
Optimism.
You're thinking thrill? You're in deep shit, man. Okay, I mean really deep crap. I'm just kidding. You must have made some money, or else you wouldn't be thrilled. Yes or no?
Yes.
There you go. Like that. Okay, that's good. Z. Where do you think? I think.
I would say hope as well.
Okay, I would say between depression and hope. Okay, I would say between depression and hope. Don't mistake the rally, this ferocious rally that I pinpointed to the point weeks ago, and even a week ago, and days ago. Don't mistake that with thinking that all of a sudden there's hope and relief and thrill and stuff like that. Because the majority of people out there are doing crap, including a lot of you. Maybe not here, talk about members. You know, I'm a straight talker, so I'm like Donald. I'm just going to say straight in the face. Except the thing, and in my service, I want to help people. My biggest joy is when a majority of my members make money. That's my biggest joy, because confidence is contagious, and it spreads around and builds more confidence, and excuses and despair and all kinds of pathetic excuses, that's contagious too. But misery likes company, right? So I'm not in the misery company. I'm sorry. Even on the worst times of my life and in trading, I did not believe that misery would bring me down. You pray to God and you work hard to build it up. It takes both. So the point is, no, we are not at hope. Okay, we are here. And this is just my opinion. So, I mean, I could be dead wrong. And if we're hope, then we're much closer to a short-term top in the market, where we're going to get another 900 points down real fast. And if we get to thrill, that means we just have, if that's the case, then we are going to basically, if we are here at thrill, because that comes over optimism, excitement, and there's thrill, that means we just have a little bit more before we get the next thump down. So I don't think we're far from thrill. Some traders might be, which is fine, because they probably had some of their best days, or even today had one of their best days ever. So of course they're thrilled at that point. I'm talking the general mass public. So we are somewhere between depression and hope. Okay, depression and hope.
Hey,
And
Frank, this seems. Oh,
yeah, go ahead.
I just wanted to say this seems like a much faster cycle this time around. We've just had some record drops
Okay,
and then some
let
record increases.
let me stop you. Like I said before, of course the faster cycle, but the parameters never change. Parameters never change. I used to say, and I still say it, what happened in years now happened in weeks. What happened in weeks now happened in days and hours. You get 3,000 point drops in the market, no one even blinks. So that's just the new normal. Yes, you're absolutely correct. The velocity, the speed is enormous. You're in a V12 powered machine, car, that you have to know how to drive. And you're not driving a 200 horsepower little car. Okay, so yes, it's happened faster, but these parameters, these behavioral parameters, I want you guys to understand this like thoroughly. And all of you are adults, all of you have gone through a lot of things in life, all of you are successful in what you do, are trying to make your lives better. I certainly am. So you understand what I'm saying. These are the same parameters that we go through in life. And it doesn't matter what sector you're in real estate, or in the stock market. So yes, these parameters never change. The speed is enormous, and it happens a lot faster. Correct. So let's move on. This is called the behavioral cycle. I didn't make this up. This has been around for a long time, and this is exactly what the markets do. Let's move on, because we don't want to make this a Anthony Robbins show. We want to make this a Crude Estate trading show. So saying all that, the reality is that a couple of broader points, as I always cover, is we have had some good news. And in life and in trading, when the news is so bad, and the news is still bad, but a glimmer of hope on things that can get a little bit better, like the flattening of the coronavirus curve. In other words, less people dying, more people being released from hospital, less infections in a particular area. And don't forget that New York and New Jersey, where we live, are the highest number of coronavirus cases in the world. Not just here and there, in the world, on a numerical basis. All right? So we're in the real danger hotspot. And it could spike again. Don't think it's all over. You reopen the economy too fast, and everyone's out there drinking and partying, and just a human relief of like, oh boy, let's go have a drink after work. I can assure you, we're going to see a spike in rates, in coronavirus rates, no question about it. And you're going to see the next 3,000 point drop, and it's coming, in my opinion. I think it's coming. So my job is to show you guys where those things are going to get hit, and where you need to protect yourself, where you need to lower your positions, and pedal to the metal right now on multiple areas of the market, in multiple stocks that I presented. pedal to the metal. And that's the stage we're in right now. And that's how you maximize profits. Make hay while the sun shines, because this sun ain't going to be shining forever. And it doesn't mean we have to come back and retest that again, but hey, we could very well do that. Trust me when I tell you. So the key is some glimmers of hope when it comes to coronavirus deaths decreasing, thank God. The Trump administration and the U.S. government taking very forceful measures, quarantining and everything, very, very important, social distancing, even though in many states and in many parts of our state, people are not following it, especially in the southern states. They don't give two hoots till more people start to die. That's what it takes for people to get serious, right? So bottom line is that this is very serious stuff. So don't take it lightly. This virus, they still don't know how it transmits, like really transmits, and how it mutates. What if it is a mutation of the coronavirus? Have you ever guys thought of that? Yeah, exactly. This is beyond it. So bottom line is that don't get complacent, ever get complacent. So saying all that, we have massive stimulus by the Trump administration, the U.S. government, even the Democrats agreed to it. I mean, what more? Bipartisan. That's what democracy should be. In certain areas, we work together. Even they came around. And then you had the ultimate socialist who would be the worst president ever, but not that he would ever get elected. Bernie Sanders finally drops out. The health insurance companies, the hospitals, which were already, and I alerted you guys all on that, HCA, ANTM, all those great companies went through the roof. And I've been talking about these for weeks, if not months. So because Bernie Sanders always, socialized medicine and all that stuff. And they hated it. They didn't hate him as a person. They just hated his policies. So that was another huge catalyst. All right. So putting things together, all you got to do is follow my Twitter feed. I put the important news out there, so I don't want to sit here and be a news service here, notifying you guys of things, that I've already posted. So let's start looking at the charts, and then we'll take some Q&A, show some stocks, and make this a productive session. So keep your questions handy, and I'll take that in a second. I'll take that in a few minutes. Okay, this is the weekly. Let's go back on the monthly. I didn't get a chance to look at the monthly. And make sure everyone's connected to the screen, and don't come back 20 minutes later and say, hey, I can't see your screen, So I don't want that to happen. So make sure everyone can see the screen. ES monthly. And one of the terms that I use, guys, since last week and before too, is the worm has turned. Does anyone understand what the term the worm has turned mean? What does it mean in simple English? I did post that a few times. What does it mean the worm has turned?
The trend.
Yes, exactly. The trend. The trend has turned. Short term, the trend certainly has turned. And that's why it's an old saying, the worm has turned. I don't know the exact, sort of the history of that term, but somebody might want to, expand on that. All right. Do I have the right color? All right. So we are looking at a chart that I've shown you guys multiple times. These charts are extremely important to keep the big picture in mind. And in between the big picture, you play the trades in the middle, because we're not trading here for 6 months time frames. We're trading in time frames of a couple of weeks, a week, maybe a month or two. That's the time frame we're trading in, because I don't know what's going to happen 2 months from now, and neither do you, and neither does any of the idiotic Wall Street analysts and the gurus on all the public forums, stock twits, and all these other great forums, which are great sources of information, by the way, and majority are bearish there anyway. So that's the part. We always need the bears, the negativity, the guys who complain and make excuses and make all kinds of garbage talk, because they're not making money. There's a saying about that. It's called the grapes are sour. The grapes are very sour for a lot of people, but we eating the sweet grapes, baby. Okay? So that's the way it goes. The ones who work hard, the ones who persevere, the ones who put risk on the table are the ones who get the sweet grapes. All right? So get with it, guys. So the worm has turned. So basically what I was trying to say, and I've said it many, many times, and you guys know that, is the indicator. This is a monthly. Each bar is 1 month, ladies and gentlemen. And this chart goes back to 2007. That's a long time ago. That's 13 years ago. 2007. That was the last peak in the market, major peak in the market. Then the housing crash, created partly by Wall Street and created mostly by hardcore speculators and gamblers in the mortgage market. Okay, with many of you, I'm sure real estate guys know that very well. No doc loans, you name it. Getting mortgages under your dog's name, cat's name. I'm just kidding. You know, your 90-year-old grandma's name, you're getting mortgages to buy a house, flip house, because you're going to be all millionaires. Then what? It blew up. So that's what caused the last major drop. That was the last major drop. Another depressive moment when it was all depression and despondency. And then the Federal Reserve stepped in big time and saved the global economy. Federal Reserve always does that. And fiscal stimulus and everything. Same thing happening now, except in much bigger ways. Much bigger ways. Before it was humans who created it, now it's a virus, which you can't see, touch. So bottom line is that these indicators are extremely important, and they're very simple. You just have to look. So the full stochastic, at every single time it has turned and remained somewhat turned, you have had multi-month rallies. I believe that's the one we have begun right now, unless we fail, and I'll show you that. So this was 2 turns. One was here in 2015, and it restarted again in 2016. Each bar, keep in mind, is a month, not a minute, not 5 minutes, not 1 hour. Okay, it's a very simple thing, but people, always so used to looking at 15-minute charts, 1 hour charts that I keep on producing, they think, oh, each bar is 1 hour. No, dude, it's 1 month. That's a long time. The world changed in 2 months, right? Exactly. So every single time it has happened, and this was back in 2018. That was the last major euphoric moment, 2019. December of 28th of 2018, December 24th, 2018, the Christmas Eve massacre. Look, multi-month rally. Does that mean that you buy something today and you definitely might make you money tomorrow? No. But if you do some powerful swing trades and you keep on going long after you take your profits, you get a day like this, you should always take profits. Always. If you don't, you're stupid. That doesn't mean you can't keep longs. You stay long bias, meaning you always have some long positions, but you buy the dips. That's a simple way I can explain it. Buyable dip. Tradable bottom. What does a tradable bottom mean? A bottom that you can trade off to make money. Just so, just to be clear about that. So here, the worm is turning again. Now, it is not confirmed yet because we haven't crossed over the percentage K and the percentage D lines. Haven't crossed over. We haven't had a crossover yet. The blue line hasn't crossed over the red line. The red line hasn't turned yet. You don't need to be a technical genius. You don't need to be Elon Musk to understand this stuff. But you're going to make a lot of money understanding these things. So the worm has turned. It is not confirmed because by the time it's confirmed, the market is going. The Dow closed at 20. I'm going to talk about the Dow Jones. It closed at 23,433. By that time, the Dow Jones will be at 24,000. So you missed out on this whole thing. I hear people saying, "Oh, I'll wait till it's till it's safe." Safe. And you hear these idiots on TV, right? And maybe some of you thought, "Are we out of the woods yet?" Like I've said it so many times. What woods? We live in a jungle. It's called the financial market. You play options, for God's sakes. You have to be a wolf, not a hyena, eating off scraps of other kills. You need to be the lion. You need to be a wolf who hunts in packs. You need to be the lion who trades solitary and makes a killing. Are we out of the woods yet? By the time it's out of the woods, the market's going to be at frigging 25,000. Then what? Too late, because then the market's going to drop another 2,000 points. And you're going to be like, So it's never safe. But opportunities are there to be taken. The word safe and options don't go hand in hand. I want all new members to understand that. Older members understand that. Options are not safe. That's the reason why you can make 1,000% on a certain day, or make 300% on a certain day in 4 hours, or 200% within an hour, or 80% in 15 minutes. That's why they are not safe. Do you want safety? Get a lollipop and sit at home and watch TV. Or popcorn, whatever you like. I like neither. Okay? So there's nothing safe about what we do. Get that out of your head. But in between, big money. Okay. So by saying all that, you can see here very clearly, we had a definitive bottom at around the 2200 level, massive long tail hammer, came down, retested, you know, not that low, but we came down last week. And then what day was this? 1 second. This is a weekly chart. So this was this week. This week we came down. This is April 1st. So I believe, I can't even remember, that the market's been so volatile. We were down on the, this is this week. So, oh, this is the monthly that I'm showing. The month of April. Yeah, we were down. When was that? 2nd of April or something? I can't remember. But we came down, we retested, and now we're going higher. So what I'm watching very carefully to see if this is a sustained rally, doesn't matter, because we're still making crap loads of money. You know, whether the rally can sustain itself for 3 months is not my really not my concern. Do you all understand what I just said? Whether the market will go up 2 months from now is really not my concern. Do you guys understand that part?
Yeah.
Yep.
Yeah, because what happened 2 months from now is none of my business. And it shouldn't be any of your business, because you guys are not, and none of us are running billion-dollar funds. Okay? Those are the guys who have to worry about what happens 3 months from now, because they can move in and out of position as quickly as we do. What concerns us, what happens in a week from now, a couple of days from now, or 2 weeks from now, or maybe maximum a month from now. Even that's too far in these markets, because in 2 months, the world changed. I mean, the world changed. You think the world's ever going to go back to the social norms that we were used to? No, it's not. Trust me, it won't. There's going to be a lot more cautiousness. People will mingle less in crowded places. There's going to be a lot of changes. No question about it. And this virus ain't done. I'll tell you that right now. And God knows what other viruses are going to come from wherever. So bottom line is that, so this is what I'm looking at. So this is for now, good. It's good. So let's move on to the next chart. Now these two lines haven't crossed yet. If they cross, that means we're going to have a sustained rally into June. Just so you guys know. But it hasn't crossed yet, and this is what might happen. And I've been dead right on this year over year over year. When it comes to long-term forecasting and intermediate-term forecasting, nobody can beat Clueless Ape Trading. Nobody. I don't care what pedigree they are, how long they've been in the business. Nobody sees the markets like we do here. Nobody. And that's what I try to teach you guys. So bottom line is, let me clean this out. And stay focused. Wash your hands. Just kidding. No, seriously, wash your hands. And when you're touching the computer mouse, wash your hands. Wipe it with the disinfectant or something. I mean, like a wipe or something before you start trading. And wear a mask while you're trading, because computers have viruses, right? Okay, it's a bad joke. So bottom line is that, yeah, right? Computers have viruses, get it? So they might jump out of your screen. And if you're sitting there doing nothing, watching everybody else money, that means you got a virus in your brain. You better fix it fast. So, all right. So once this crosses, ladies and gentlemen, once we have a sustained crossover, a confirmed crossover, then that means we will most probably have another green candle, and then another green candle. And those lines are drawn to max level, like where we can go to. But that's tomorrow's worry, not now. So let's see if this crosses. Now, the negative part is, we are about to cross. What if we come down and do a double dip? What if we come down and do a double dip? We did it here. And if we do a double dip, that means the market's going to go up a little bit more, and bang, it's going to come down 2,000-3,000 points. Maybe it's not going to come all the way to the bottom of the channel. Remember, these are the bull market channels. You know, you hear a lot in the news, the bull market's broken. You guys have heard that, right? You guys did hear that? Like the bull market is broken for now and all that stuff?
Yeah, all over the place.
All over the
Yep.
place. How big a lie is that? That's the biggest piece of garbage fake news ever. I mean, I swear to God, if I was a public figure, and I do not want to be a public figure, because I'm going to like rip some heads off. You imagine me on TV? Seriously, I'll probably get the highest rating ever. It's going to make the apprentice Trump look like baby food. You know, seriously. You know, what kind of a complete scam, scumbag lie is that? This is the bull market that started in 2009. And how is the bull market, this whole channel? Unless we broke the channel, which we did for a couple of hours, for a day. How is this bull market broken? Think about that for a minute. Think about the lies they spread. And it's not just Democrats, it's Republican analysts and everybody. It doesn't matter. Everybody's telling us the bull market's broken. Complete hogwash lie. The bull market's broken once you break this channel and stay below that. Then see you later. And it can still happen. Trust me. So bottom line is we could do a double dip. And if we do a double dip, the market's going to come down and retest these levels again, maybe 2,400, very easily, very easily. That's another 2,500 points. Yeah, 2,500 points, easy. It can happen in a day. So be prepared for that. Just letting you guys know. So we don't know yet whether or not, and these things speak volumes. We don't know whether or not this is going to cross over on a monthly basis, or whether it's going to do a double dip like that, which we call a double bottom, which would be very powerful. And if we get a double bottom, let's say we pull back, and I wouldn't mind that actually. And a lot of you shouldn't mind that either, some of you, because you did nothing in this heavy duty rally that we did. So it will give you a second chance to make some crap load of money. Are you guys with me on that?
Yes.
Ladies and gentlemen, hi,
Yep.
Sue.
Yep.
Yep, exactly. So yeah, so that'll be another opportunity to load in things 50 points lower instead of 50 points higher. These stocks, right? Like Shopify, told you guys to buy it right at the bottom. Like now, ServiceNow, just to give examples, ANTM Health, United Health, Humana. So many. So the bottom line is that we'll see. Let's move on to the next chart. I don't want to spend all night on this one. So the next one is the weekly chart. This is a very bullish chart. Why? Because the worm has definitively turned. And this is not the worm at the bottom of a mezcal bottle. All right? This is the worm that makes you money. So this is your weekly chart. Let me get the pen. And you can clearly see here, which I've been pinpointed to you guys through and through, that the internals have started to turn. What we would like to see as technicians is this very large drop in the MACD, MACD. Look up the definition of that. Moving average coincident divergence. Look it up on Investopedia if you want to learn a little bit. We would like to see this turn. And any one of you can see all this stuff on your side, by the way, just so you know. Investing.com is just one platform that I use for charting. It's so easy on the eyes. And it's free. Okay, just put in your email and start charting, start looking at the same charts that I look at. Of course, I structure my charts in a very different way. And anybody who needs help with that can certainly seek my help, sign up for the advanced coaching sessions. We teach you all that. So you manage your money better. More importantly, you make money and stop losing money. The two ways to lose money: one, because you don't make it, and two, because you do stupid things and do emotional trading and sell something while within the next few hours or within the next day that goes up 400 points. And don't tell me you guys haven't gone through that. Okay, so what you don't make is what you lose. Never forget that. That's the same thing in life as in trading. So when you say like, oh, I didn't do anything today, that means you lost a lot of money because you didn't make it. So this one is bullish. We'd like this to turn. This has turned. And you can see here how powerful these candles are. Now, this is a weekly chart. Last Friday, this is a weekly chart? Yes, I want to be there. So I believe last week we had a pullback on Friday or something. I can't, somebody can correct me if I'm wrong. And I'm sure everyone freaked out. I told you guys this was an inverted hammer with the green. It was more like a doji. And I said, it's okay. Why did I say it's okay? Because this was turning. As long as this is turning, you can buy the dips or stay long. It doesn't mean that you don't take profits when the market gaps up 15 points, 15 handles on the futures next morning, and you're up like 40-50% on a position. You're like, oh no, I'm just going to leave it alone. No. You want to take some full or partial profits. However, you still want to be long and you get back in it again, or hold on to the main position and take some monies off the table. Are you guys with me so far?
Yep.
Okay,
Yep.
good. So bottom line is
100%.
this keeping on turning. Once this keeps on turning, and it's a nice sort of rounded bottom, not like a V-shaped bottom. It's a nice rounded bottom. That means lots of volatility, but overall bullish candlestick patterns. So is it okay? The weekly pattern is fine. Now it's starting to hit some levels here where we're going to see on the daily where we might get a pretty sharp pullback within the next 3 trading days. Tomorrow is Thursday, Friday's closed, Monday, Tuesday, or maybe by Wednesday. Just letting you guys know. Okay, market doesn't give you free rides. They only give you free rides and showers you with money if you got in at the right spot and hold on to those positions. Particular type of stocks. Some stocks will take 2 months to work. Some stocks will take 2 hours to work. Some stocks will take 2 days to work. That's just the nature of the stocks. For new investors, they have to understand that. Not all humans are the same. Okay? So this is good. Will it go all the way up? No. This red line here is your mid Bollinger, and that's at 3,055. Some people might say 3,055. Whoa, as if the market's going there. Well, some market might go there because the negative, because we fell out. I told you guys this many times. I have never seen, nobody's ever seen, not just me, nobody's ever seen in the history of the U.S. in recent memory that we stayed out of these 2 blue lines. Those 2 blue lines are what? Somebody step in and say it. I'm sorry, what?
Bollinger Bands?
Bollinger Bands, yes, thanks, C. So these 2 lines are Bollinger Bands, okay? Never, ever in the history of the United States in recent memory have we had the market stay out of the Bollinger Bands for forever. Never. It's not mathematically possible. I don't care whether it's a virus or whether it's your brain or your diapers or whatever it is, okay? It never. So guess what happened? We attempted to go back into it last week, and we ended it right outside the Bollinger Band. This one, right there. And this week, we went power in. Last week, we attempted to stay in there. By the end of the week, we actually closed right below that, but still a green doji. This was turning. This was starting to turn. This worm turns. You don't even know where this market's going to go. All right? Exactly. Not this indicator, not the stochastics, but this MACD on the weekly starts to turn. This worm is going to devour, chew, spit out, and slay every single dogmatic bear out there and short. Like literally shred them. And if you guys are still sitting around thinking about perfect moments and Goldilocks and Red Riding Hood and whatever you think about, okay, then you should never be a trader. Please, don't do yourself a favor. Do yourself a favor. Don't. When this turns and you're still not trading aggressively to make short-term money as well as medium-term money, then what are you doing? So we haven't seen that turn yet, but don't wait around for that turn. Play this for now. So that's it. So this is quite bullish. This is quite bullish. The weekly chart. Let's move on to the daily, which gives us more of a picture, pinpoint, sniper. Anyone seen American Sniper?
Yeah.
Exactly. You know what snipers do, right? They're the smartest brains in all our armed forces. They're not just good sharpshooters. They have to calculate so many things in there. They'd probably be the best options trader. I have a bunch of people who are from the U.S. Army. I don't know if no one's telling me if they're Marine sniper or not, or if they're SEAL, or because they're good. Because a sniper calculates so much stuff in their brain, like a matrix, and then takes out the thing. Rain, wind, or shine. Somebody from 3 miles away. To me, it's fascinating, like how they do it. It's not the rifle which does it. It's the sniper that does it. So this is the sniper charts. All right? So focus a little bit more than you guys are. So we saw it from all the way down here where we could possibly go. And we took out the target along the way. We took out targets along the way. We haven't reached the promised land yet. I'm not saying we can, who knows, we might not even reach it. It's so close. The promised land is this blue dotted line known as the Fibonacci 50 level, Fib 50, 0.5. I've talked about it to the point where some people are like, can Frank stop saying Fib 50? In fact, I should print some t-shirts. I will actually, and send it to all my members saying Clueless 8 trading, Fib 50. Tactical, not emotional. Okay? This Fib 50 is so close right now. We might get there. We might not. And that's so close. Like we're at 27.47 right now on the futures. No, 27.41 actually. So this is 27.86. So that's 45 points. So that's roughly another 360 points on the Dow. Can we get there? I don't know. I think we do. Because the magnet, it's always like a magnet. It's a magnet on the downside. It's a magnet on the upside. So as a sniper, we recalculated from all the way here. Once we started to see this move, once we started to see this bottoming process, and the worm turned a long time ago. While some of you were sleeping and not doing anything, the worm turned, ladies and gentlemen, on the 23rd of March, 2020. 23rd of March, 2020. That's when the worm turned on the daily. All right? So bottom line is max potential was here. But that's okay. Could have gone along here. You could have gone here, bought this dip when everyone was freaking out. I said it was a cup and handle. I explained the very thing. Did I know exactly it was a cup and handle? No. I went with my technical information. I went with my calculations, my hunch, the fact that this was still crawling higher. I said, you know what? I put a lot of other indicators that I don't have time to show together. I looked at the overall picture. I looked at the sentiment of traders, and I said, you know what? We should still stay long. We should still stay long. So this was a cup and handle. I was dead right. I'm sure you guys are with some other service and stuff. How many people told you to buy it here? I'm telling you, not many, if any. Because most of them were like, okay, here comes the next thing. You see all those guys, I'm not going to say name because before some lawyer sues me, on CNBC, and they're like, oh, yeah, we're definitely going in for a double dip. Why don't you go get a double dip and an ice cream for a change instead of trying to tell people never to buy stocks and helping U.S. Investors make some money because they're so dead wrong most of the times, almost all the time. Go get a double dip and an ice cream. Yeah, there's a double dip. Okay, you might even get that, but the point is, it's not here yet. So key is that we shot forward big time this week. Today's what? Today is Wednesday. So yeah, Monday, Tuesday, we had that 900-point pull, which was almost kissing the promised land. You could have taken so much profits because we were long. We were long even after this candle. We were long. Yes or no on multiple trade alerts? Yes or no, guys? You guys have to think.
You alerted to.
I alerted many things.
Yeah. I mean, to sell at the open that day, I specifically remember you said take your profits at the gap.
I said when the market opened up a gazillion 600, 900 points, they were distorting the options. My things were up like huge, and I was trying to sell some of them. They're like not giving me the prices. But even if I sold at the lowest bid, I would still make money. So those are the days I say take profits. Of course, take profits. And wait to see what happens. And then it was a busy day for me. I had some personal stuff to take care of. And then the market closes down minus 900 points. But I told you guys to take profits, for God's sakes. And then we came in and we bought more stuff. towards the end. Now that was not necessarily a good picture with it. That's known as inverted hammer, and you definitely don't want an inverted hammer. But this is the difference between just looking at a chart. I want you guys to all understand this and take it freaking seriously. You're sitting here at 925 listening to this so you can make more money and be a little bit smarter how to trade these machine-driven markets. That the reason I didn't think it was all over is because the stochastics kept on going higher, still going higher. So there was a chance we could have dropped lower, sure. But I looked at many other stuff and none of them confirmed that we were going into a downdraft. And this is what happened today. So of course, again, so many trades, we took a whole bunch of profits and we left some longs in place because this can still go a little bit higher, but it is starting to get overbought. But what's the other big thing that told me that this market was not going to go lower? Can somebody, let's see, and somebody can tell me what was the other chart that I show, which is the ultimate signal?
Maclean oscillator, VIX.
Somebody else.
The VIX.
Somebody else. I want to hear from everybody, or else I'm shutting down this webinar. I'm dead serious.
The VIX.
Go ahead, somebody else.
Yeah, the VIX.
All right, and who didn't answer? Please, Sue, I didn't hear you answer.
Sue left already.
Yeah,
Oh,
hi.
no, there she is.
No, Sue didn't leave. She came back. Sue never leaves me. Sue loves me. Sue's been with us for a long time. I'm just kidding.
Yeah.
Sue, how are you, ma'am? Everything good?
Yeah.
Everyone safe?
Yeah, thank you.
Thank you. Always good to hear your voice. Okay, so you guys all answered. It's the VIX. I am so happy. You know, people didn't answer this. I'd be just like, oh my Lord. Yeah, the VIX. So the VIX still, and this is what the last chart that I'm going to show you, is the VIX is still going down. It's so bullish. It's like, I want to pull out the 5 hairs on my head. Just kidding. I think I have 6. On a good day, maybe 8. So honestly speaking, yes, the VIX. The VIX is, the weekly VIX says we are going into 3,000 S&P. The shorter term VIX, like the 1 hour and the daily, are starting to get quite oversold. And that means that we will see some major resistance at this level. Very simple. Problem is we just don't know exact timing, what day it is and stuff, but then we look at the 1 hour charts and stuff. So let's move on. Great answer, guys. I'm very proud of all of you. Seriously. It means some of the few things that I'm doing, you guys are actually getting it. And once you get it, it's more fun. Come on, populate the screen. A lot of people use investing.com, so I think the servers get really bogged down. What is taking like half a day? All right, not nice. All right, let's take a look at it. This is really bad. Look at that, it hasn't even populated yet. Look at this. Let's have to... Okay, good, it came, good. So this is your real trading chart. I follow this like a hawk. So that if I'm up like some big money on something or some money on something and it's hitting these levels or hitting some resistance levels or support levels, I say, okay, let me pull back a little bit. And now that all of you are mostly stay at home and looking at screens or whatever you're doing, you have more time, you have no excuses not to be a semi-active trader. Look at this. It took me out. So I got to re-input that chart again. So that's your 1 hour chart, and the 1 hour chart is the one that, you know, I make the calls on an intraday basis. Real simple. I mean, you guys know that already. Again, Mr. Fib comes in, Mr. Fibonacci. This is this has the AD line on it, the advanced decline line, the breadth looking pretty good. This is on an hourly chart. This tells me when things are getting overbought, when they're going to reset a little bit. And so this is great for intraday traders. This is great for multi-day traders. It's great, period. It's just very good. All right. So here's your Fibonacci, this was the level that we were looking at. Now I'm going to adjust it for tomorrow. In fact, I'm going to do it right now. So this was original Fibonacci 50. We took that out. We kept it. Remember, the market was, I told you that was a cup and handle. Here, big cup, sideways handle. Told you guys that as recently as the last webinar. There we go. I said we would be doing this, and this is quite a bit. This is like this is a good solid 1,000, 1,200 points. It's not a joke, all right? It'll whipsaw options back and forth. But I said this is what it's going to do till it breaks out. Well, guess what? It broke out. When did it break out? Yesterday. So now we have created another trading band, which is this, which is another 600 points, 800 points right there. And remember, when the markets sway around 800 points, don't tell me that majority of you are like, oh my God, what's going on, right? Exactly. So don't be the zombies. So don't worry. Yeah, worry. I mean, I shouldn't say never worry. I worry, trust me. I worry all the time. But that worry should be a positive worry, not a negative worry. Like you're going to shoot yourself through the head kind of worry. You know what I'm saying? So bottom line is it's like, so that's it. That's another 800 points right there. So can we do that? Sure, we can do that. We can do that in 1 hour. And so as long as we don't break that, if we break that, then we're back in this zone again. Just letting you know. Simple. And if we break out, we're going to go towards 2,800. And then at least on this chart, you can see I had it. This chart goes back quite a bit. So 3,200. So let me just push it up all the way to the top. This was pretty much the top, right? 31, 33. No, we were way off the top. No, where were we? We were 3,400. So let's move it up to 3,400. Let's take these lines off and let's do a reconnaissance on where the enemy lines are. How about that? Okay. So you guys can be the ultimate snipers and take out the bad guys. Let's go take out the bad guys. The bad guys are the ones who want to take our money away, right? Those are the bad guys. And the bad guys are the algorithmic high frequency trading machines. Those are the bad guys. The bad guy is not the virus, because the virus is not a guy. It's a virus. That is something we have to fight. The bad guys in trading are the machines that are constantly taking your money away because they know how emotional you are and they know how to get you. Those are the bad guys, real bad guys. The other is the danger. That's clear and present danger. That's the virus. Get that through your head, guys. All right? Are there any good guys in this business? Yes. You know who the good guys are? These charts. These charts are the good guys. So make friends with these charts. They're going to make you money and they're going to keep you happy. Not me. I'm not a good guy. Okay? Trust me. The charts are. There you go. Now we're talking business. Now, at this point, the Fibonacci goes up to right here. Now, remember, we're talking the top of the market, bottom of the market. Recent, the world changed. And the Fibonacci levels now are, the Fib 50 is here. Read up on the Fibonacci thing, okay? It starts off at 0.236 is 23.6%. That's at 2460. The 50 Fib, then there is a 38.2. These are the exact parameters. 38.2, 2639, 50 Fib, very important. 61.8, 78.6, and full completion, depending on where you're drawing it from, top to bottom in this case, is 100, which is 1. That's full pattern completion. So if you look at this right here, the Fib 50 is at 2784. That matches with all my other numbers and all my other charts. 2784. That is around the corner. That's 50 points from here. That's roughly another 400 points. And futures are red right now by a point. And that's where we are right now. Okay. So now I did this in real time with you guys. So you can clearly see here, uptrend is intact. We can go back and forth, 300-400 points can happen very quickly, very quickly. No oil deal tomorrow or some sort of constructive comment on the virtual OPEC meeting. We can be down 300, boom, just like that. Does it break the trend? No. So get ready for that. All right. Don't be thinking futures are going to be up like 100 zillion points tomorrow morning. It could be, but always get to know where the enemy lines are. All right. So so far this is good, and this was the breakout level, one of the breakout. This was the breakout level. This is the breakout level. So this one is 2641. So that's what we have to watch for. Roughly another 100 points down from here. That's 800 points in the Dow. We could lose 800 points on the Dow and still be on an uptrend. And I will show you that. I'm not even doing the inverse head and shoulder and all that stuff. I'm just drawing a cup and handle. We broke out of it. It's a bull flag. And the bull flag is intact over 2650. Are you guys with me?
Yes. Yep.
Exactly. So even if we drop 800 points, that's why, you always need to have cash on the sidelines. And you can get in there and buy the same things you never bought, and you saw it go up 60, 70, 80 points. So many of these stocks, you can say, hey, it's down 40. Let's take a look at it, see what the tweets are coming out. Use your own judgment. Ask me whatever. I'll probably put out the alert anyway, and we'll go from there. So this is still in an uptrend, as long as we don't break 2650. If we break this, then obviously it is going to be, again, retesting this cup. Look at this. There you go. See this green line? 2556, below 2556. And of course, if this breaks, or even if it's starting to fall within here, you can do some quick short-term SPY trades. I bought a few hedges today because there was one sharp dip this morning. I left it in there because it was a small one. It's a hedge. SPY puts. They went to, they went to almost zero. Who cares? Because the rest of my stuff went through the roof. And it's a hedge. It's a very small percentage of it's an insurance policy. So the insurance policy was just like, when you pay your insurance, unless something bad happens, then you never get paid. That's like lost money, right? It's like, life insurance. Unless you're dead, it ain't paying you. So it's an insurance. Insurance, went great. So that's why I said the puts got smashed and the market went nuts. So that was kind of a bear trap today. They trapped the bears very nicely. So anyway, so if this is coming down, you can buy some SPY puts. You have to be quick on these though, because the minute it comes down, a couple of 100 points, boom, it's going to jump again. We shall see. Now, keep in mind that I do not expect a major crash tomorrow. Why?
Because it's a holiday.
Because it's Easter. Exactly. Good Friday. I do not expect the stock markets to crash before Good Friday. Yes, exactly. Because it's and a very important religious holiday. Right? Exactly. You remember. So, okay. So let's move on. That last chart I'm going to show before we take questions is the VIX. I really like this chart. Not because it makes us money, because it looks so pretty. Doesn't it look pretty, guys? Do you think if I put this in a nice, beautiful metal frame, I could sell it, I could sell it on Amazon or eBay? Say, guys, look at this. It's called the VIX. And who knows, some big collector from Miami said, hey, Frank, I'm going to give you $1 million for that painting. I said, sure, sir, please do. All right, guys. I really like this. It's so precise. Power. It's like a sniper looking through the crosshairs. Seriously, guys, wake up, all right? Think differently. I want you guys to think differently. So what is this chart telling you? It's telling you the same thing that it said to me days ago, that the market's going higher. So while some of you, maybe not some of you here, but some of you are going to be listening to this, sitting there looking for new colored diapers from Amazon, but they run out of diapers, right? Obviously, or you're going to Costco because you can't take trading anymore. I suggest you focus on this. Spend money on taking advanced coaching sessions instead of spending money on diapers. You'll be a lot more richer, trust me. Now, if you have kids, that's a different story. So bottom line is, it's going down. This again was the opposite of what happened with the market. It stayed outside the Bollinger Band 1, 2, 3, 4 weeks in a row. Cannot happen. It doesn't happen. The moon always rises. The sun rises and the moon shines and the moon rises in the evening. The moon's always there. We just don't see it. Right? It just doesn't happen. It's a law of nature. So guess what it did? It came plunging back into the Bollinger while the markets rallied, came down, rallied, came down, rallied, and the VIX kept on going down. This is your first sign. It already was the first sign that the markets wanted to go higher. You didn't need to watch CNBC. You didn't need to listen to other hotshot guys telling you all kinds of stupid things. All you had to do was fall in love with the VIX. It's kind of reverse love. Get it? Okay. So what do you see here? I see what I see. Charts don't lie. People do. Traders lie all the time. Charts never lie. Just have to read them right. Charts do lie at times because the machine screwed them up. I do apologize for that, but generally they don't. So this crossover is intact, the crossover down as we call it, and I believe the VIX is coming down to somewhere around 39.90. Best case scenario, if we do have a sustained move when the monthly stochastics turn over, if you remember from the first chart that we saw tonight, then the VIX will break below this and come crashing towards 30. In which case the market will go up a lot, and then you can very happily short the crap out of the market again. Simple, huh? Well, hold me to it because I'm going to be dead right. But once it reaches here, this dotted line known as the pivot, it is going to bounce. And it'll bounce towards 50. VIX moves in increments of 10 points, just the way the S&P does also. But very fast, like Paul said, these days, because of the machines. So this is your weekly telling us we have a sustained recovery in front of us. But there are certain support levels where the VIX is going to bounce from. Are we good with this? This dotted red line was not put by the computer. It was put by Mr. Clueless Trading here to show you that when we do have a crossover down, the same stuff happened back in December 18th to the December 24th massacre. The VIX spiked all the way towards 40, 35 plus. And then on a sustained basis, weekly, each candle is weekly, the VIX went down all the way down to 15. And this happened. So why shouldn't it happen this time? Question is, there's no rule that says 100% of the time this should happen. This could come around here and then turn. Oh, in that case, I'm shorting the crap out of the market. If the VIX stochastics come down like this and then start to turn, I'm getting out of my long position so fast, not even funny. And I'm going short. Okay? Because that means there's some serious, and it can happen, guys. We could get a spike on coronavirus, things like whatever. I don't know. You think this is over? I don't think so. So anything can happen. But right now, at least it's showing us that it wants to head down. Now, this is what is worrisome on a short-term basis. That's why I'm saying we might have a short-term pullback, even as early as tomorrow morning, ladies and gentlemen. And I explained all that to you, and I know you guys got it, is this. This is your daily. And one thing I want to remind you guys, real technical wonks like us who look at everything in the form of charts. Of course, I mix in all other fundamental economic and all that other news. I take that into account too. But we're focusing on technicals. It's a very different way of looking at the market. So some people, it's like very strange, like, whatever. But the more I explain it and the more you guys have a passion to learn it, you'll see it. You'll be more mechanical than you ever been in your life. So the key is what's happening here. It's quite easy to see what's happening here. The VIX is getting very oversold. So the most we can come down to is possibly like 40, maybe lower Bollinger 39. And then it's going to bounce. And what does a bounce on the VIX mean? The market's going to fall. There. Now, this is a falling wedge happening. What do falling wedges normally do?
Break to the upside.
Break to the upside. Thank you very much. Who said that?
El Nino.
Yeah, there you go. Yes, sir. break to the upside. Rising wedges or rising diagonals, whatever they call it, break to the downside, creating a bull flag most of the times, and then continue on their primary trend. Primary trend higher, higher. Primary trend lower, it can go up and then fall again. So even if it breaks out, if it continues with the primary trend, it'll then go lower again. But initially, if it breaks out, if the VIX goes up from 35 to 45, that means the market's down 600 points. Fast. So we are getting there. This is what's telling me we are starting to get really oversold. We get oversold like this, it always bounces, always, always. Just like stocks on the other side. You get oversold, stochastics, you get a reset. So I would say we do have an imminent pullback in the market by early next week. Don't think tomorrow. So position yourselves accordingly. Okay? Now, so these things happen very fast, but I'm just letting you know. Now, the other chart that I look at the VIX very clearly is the 1 hour chart. The 1 hour chart is this. There. That has been kind of in the dumps, but also very oversold. You can see that, the 1 hour chart. The downtrend line, I told you, we're going to keep going down. It's pretty much what happened. And every time that it perked up, the markets went down 200-300 points. Yesterday we went, yesterday was what, the 7th, right? 7th. So we went up like this. See how the VIX pulled up from 43 to 47 yesterday, right? From this level, the markets gave back 900 points. This is the ultimate canary in the coal mine. This is the ultimate signal. So the 1 hour chart, if it bumps up again towards 47, we're going to be down 600 to 800 points. Easy. Got it? So we have to be cognizant of that. Just wanted to sort of explain that to you guys. Very oversold. It can kind of move sideways. That happens. It's done this before. It kind of moved sideways. It kept on going higher, but the downtrend continued, right? So it's not like it's a guarantee that it goes this oversold. It has to go up a lot. In other words, the markets have to fall. There's nothing written in stone. The pressure, the momentum of the market, you can see that in the form of those big green candles. That's a lot of money going in. That's short covering money, new money coming in from institutional fund managers, and they are pumping in hard. Very. So, and they are
Hey,
not
Frank?
the type. They're not the type to like leave the market tomorrow. Yes, go ahead. Question time. Yeah, go ahead,
So
sir.
you've given a compelling case for the VIX is about to rise, in the short term. Is this a good time to buy some puts, like maybe
Sure,
for
sure.
mid next week?
Absolutely, absolutely. There's no harm being in short. Okay, there is absolutely no harm staying a little in short. So let's say, for example, give you a simple example, guys. So let's say somebody has $10,000 invested in options and stocks. So how much insurance should someone buy on that? I would say maybe $1,000. So if that 1,000 insurance works, it protects you on your other 9,000, because if the VIX does jump up, that $1,000 can probably go to 2,000, and your other side will pull back unless you have reduced your position, whatever the case. But it buffers you. It buffers you. And God forbid we have a 3,000 point crash. We have seen a couple of times we have had spike calls which have gone through the puts, which have gone through the roof. So yes, the general rule of the thumb is 5% to maximum 10% of your, and it depends on everybody's risk level, of your portfolio should be insured through SPY puts or any other instrument that goes higher when markets go lower. Short hedges, as we call it. Did everyone understand the question that Paul asked?
Yeah.
Exactly. I'll certainly do that, but here's the problem. The market is so strong. The negativity is so strong. The sentiment has to be taken into account. Paul sometimes supplies us with some terrific investor sentiment charts. So when you have one, Paul, do send it out, and I present it to on the Twitter feed so everyone can see it. So thank Paul for that. I bet you the bearishness is supreme. Nobody's bullish. And we can see that in the form of many different things that are going on. And one of the charts that we're going to look at right now is this one, for example. This is my proprietary 533 chart. This is the directional bias chart. So let me get this out here. No thanks. Okay. So many ads. Okay. So this one is telling me that we are getting overbought. This is your SPX 533. Very simple to see. Not fully overbought yet, but we're getting there. Anytime we get into the 90 to 100 zone, right up here, it's a. But look at these lines here. This is what you have to focus on. Now, this I don't get a chance to show all day long, but I use that. First of all, this is the W pattern. We'll change the color. Are you guys with me so far on all the stuff that I talked about? Because this is a pretty serious webinar. I mean, a lot of technical,
Yep.
and I think all of you are getting it, right?
Yep.
Okay, good. So and even some of you who are not getting it, just act like you're getting it. I'm just kidding. I mean, I made this very simple, so do it. But once you get involved with my stuff more, once you start doing the coaching session, and these are for new members, then you really get it. So bottom line is, this is the W pattern, and this W pattern is shooting somewhere towards the 2800 level. This is certainly telling me lots of internal strength. The RSI right now is getting overbought. Overbought is 90 to 100. So you can move back a couple of days before it pulls back again. And pulling back doesn't mean it has to go all the way down to below 30 or 20, which is a screaming buy. It can come down to 50 and then jump from here. That's standard technical procedure. This is telling me some heavy duty, what do you call, momentum, underlying strength. Look at the pillars. We went from being negative 40, negative 50 to like positive 40. So we're moving very fast. So when a ball is rolling, it's a law of inertia. Body at rest likes to remain at rest, right? It's physics law. It's a law of life. So a body in motion likes to remain in motion. So right now the body is in motion. Markets are physical bodies. All right. So a body in motion is now pumped up. Like, let's go, come on, let's hit that. You're almost at that mark. You're almost at the promised land. All right. So you want to get there. So bottom line is, the momentum is all the momentum indicators that are favoring. Even MTUM, Paul, check it out, is now getting towards those levels where it's getting up there. The best part is, from a sentiment side, nobody's really on the train. Exactly. So that's the best part. The majority are not thrilled or making tons of money. They're like either making a little bit, or they're still looking for new diapers. So that's a very positive sign, just so you all understand. Negativity is good. So all right, so we are getting there. This line doesn't mean we're going to 3,400. This is just stochastics, by the way, turning up. So this is pretty good. Now let's take a look at the weekly, which I haven't had a chance to see. So I'll share it at this social party that we're having called a strategic webinar. Somebody please serve us the virtual drinks. Aldi, you're going to be my, you're going to be our drink master.
You got it.
You got, yes, exactly, right, man. I can't wait till these things so we can all kind of get together at some point. Like, god damn it. So all right, let me have everything here. Let me change this to pivot. Let me make 4 months is good. This is very bullish, by the way. This is really bullish. This is like bullish, like the VIX breaking down. Let me do for histogram color and hit update. Beautiful. This is so freaking bullish. Either it's very bullish or the world's really coming to an end. I don't know what, whichever the case. We've already come through the world coming to an end. So what more is new? Here, we're just peeking into the green. Hallelujah. Normally, when we go into the green from being deep oversold, this is the weekly version. It's a longer term version. We normally tend to stay like that for at least 2 or 3 weeks, if not longer. And look where we came from. This is deep in blood red. This is actually red. So now this is telling, and this is the best part. See how the MACD histograms are shrinking? Generally, the way the world used to be, and this time it is different, mind you. It is different. Not just the virus different. There was a lot of technical damage to the market. Straight from a bull market to a bear market in 2 weeks, and now kind of climbing back, unheard of. So bottom line is that generally, when the histogram starts shrinking over them over multiple weeks, they tend to go green. I mean, they tend to go positive. I have no idea if that's going to happen because we went to minus 100. Like, whoa, just the thought of that is just like, you know, it's like the pillars of the Colosseum in Rome just basically just fell and crumbled. Right? So this is what happened. So I don't know whether it's going to go into the positive, in which case we'll be making new highs in the stock market again, which is possible. But all I know is it's shrinking. So it's you know, just the way the curve, the coronavirus curve is starting to flatten. If it starts to come down, then the markets are really going to take off like crazy, right? This is the, I'm going to call it CV, coronavirus. So here, this curve is now starting to go like this. Now, next week, will it be smaller? Will the histograms be shrinking? We want the histograms shrink and go positive. You guys understand that part, right?
Yep.
Exactly. And if they dip, then like I said, that's a different story. So that's pretty much it, guys. So throw me a stock or two. Futures are down 2. Let me, and I'm gonna pull out.
Hi, Frank. This is
Let me. Oh yeah, just hold on for 1 second, Z.
Okay.
I was just gonna show this while you're gonna ask. And before I get into answering questions about stocks, there are so many stocks moving. I just can't even keep up with them. I'm just trying to keep up with the big movers. And there's so many big movers too. So this is really bullish, guys. It's a very clean chart of the SPY. This yellow, orange line, as you guys all know, is a 34-day moving average. We went past it. This is not necessarily a bullish engulfing candle, but it's a nice one. Okay, we want it to be a fatter and taller. So if somebody just looked at this chart, the next gap fill is at 281. 281, right there. The dotted line is the gap fill. That was from March 11th. So this is a very clean chart you guys can trade off too if you're a swing trader. So this is very positive that we broke out. And I was telling you, we're attacking. First attempt failed yesterday. Did anybody on CNBC or any other newsletters you guys follow, anyone talk about the fact that one of the only reasons, technical reasons, one of the really only reasons why we fell yesterday and gave back the 900 points, but still retained the body of the candle over the previous day's hammer was because we hit the massive downtrending 34-day moving average. I don't think any of you ever, did anyone mention, did you guys read that anywhere?
No.
Exactly. That's the reason why you should have 900 people sign up for Clueless A Trading. The only reason, technical reason, why the market gave back the 900 points, technical reasons, was because we hit this massively downtrending 34-day moving average. The first attempt is always a rejection. The first attempt is always a rejection. Just the way you all, with your partners, your husbands, wife, the first time, they kind of saw you, they probably didn't like you. I don't know, I'm just kidding. But seriously, the first attempt at a technical move is generally, especially after all the damage that has been done. So that's what happened yesterday. Ladies and gentlemen, we hit the 34-day moving average. We tried to punch through it. This was nice and green. And then it said, I'm tired. I need a break. And today, bang. Will it stay? Hopefully. And if we get another move, we're going to go to 281. That's 8 points from here. That's another 500 points from here. Very clean. This is very clean. Look, this is very clean. Getting overbought, but getting there. Now, Z, your question, sir. And these are all gap fills. So when I put these charts out, print and save them somewhere on your computer, just for yourself to make money. Go ahead, Z. Yeah.
I came across the stock SPR,
Okay.
and I wanted you to analyze the chart for it.
Wow, this looks really good. Spirit Aerosystem, of course, Spirit, the airline.
It's not the they're actually they build planes for Boeing.
I apologize. Spirit Airlines is a completely different story. Thank you so much for correcting me. Spirit Aerosystems is exactly a Boeing supplier, right? They
Yeah, and Northrop Grumman as well. So they're big suppliers for big companies.
Correct, but Northrop Grumman is a far more expensive stock than Spirit.
Yeah,
So
yeah,
yeah,
that's why I kind of looked
so
into this.
yeah, this is a damn good looking chart. I don't need to even super analyze it, honestly speaking. Boeing is on a mend, as you know, and the airlines went up. Airlines went up quite a bit today. We missed that whole sector this week, but I can cover everything. I mean, I looked at AAL and United Airlines, and these were up like $3-4. They were up like 10%, 12%. Real sweet, real sweet. So I'm totally with you on this. I'm writing this down, Z. I'm gonna completely construct the chart and put it up tomorrow. I really like it.
Do I get a second chance to ask the second stock since this one was good?
No, this one is damn good, man. I love it. 1 second. This can go as high as 37. This can
Yeah,
go as high as 24. I don't care. Give me 2 points on these because that calls are dirt cheap. I bet you the calls are dirt cheap. And look at the volume on the daily.
yeah. I got
Wow.
common. I didn't look at the calls, but
No problem. The calls are in the $1 to $2 range. I'm looking at it right now. Bear with
okay.
me 1 second.
Okay.
And
The
anything to do
options are
with
crazy this week. But,
listen, I'm going to be looking on the May 15s on these.
okay.
17th April is only 1 week away. So let's say, for example, we want to. Are you guys with us? Everyone's awake?
Yes.
Yeah.
All right. No virtual drinks yet, Aldi. What's going on, man? All right, let's see here. 21. So I would be buying the 22.5 calls. For this kind of price, the calls are not cheap, which means that the stock's going higher. Remember, when calls are not cheap, that means the stock's going higher. They always stuff the premium. When the calls are dirt cheap, that means the stock's going lower. That's kind of like a rule of the thumb. I'd be looking at the 22.5 calls, which are only 50 cents out of the money, and those are you can buy them at $2.50. This is a done deal tomorrow. So write it down, guys. You don't even need my tweet. Just buy it. Unless we have another coronavirus attack and an airline shutdown again. Spirit Aerosystems, SPR. Okay, next stock. Go ahead, Z.
And we spoke of airlines. Actually, I kind of like Delta with their cash position and the
Okay,
chart.
I don't need fundamental analysis, please. Okay, I'm just looking at charts here. Cash positions or not, if nobody wants to fly Delta, the cash position is going to burn out pretty fast. I don't necessarily like this chart. I like SPR a lot more. Look at the body of this candle and today this. Yes, the stock certainly has room to move, but that, at least from a candlestick dynamic, that one's a better move than Delta. But here you still have 1 to 2 points inside the belt. I would have liked to see this be a bigger move. In fact, if I'm correct, American Airlines was much better. American Airlines, we used to trade these stocks. That's why these lines are still here. American Airlines actually went up from 1047 to 1147. Much better looking candle with a wider body from a technical standpoint. UOL is super. UOL is again jumped off the 5-day moving average from 24 to 27. This is the one that I saw flash by on CNBC, $3. So I like UAL, AAL better than your DAL. Look at this and look at this.
Yeah, I see.
1 second. Look at DL. It is nothing. It's not even a body. Look at that. It's a doji. So big money is betting on those ones. United Airlines and American Airlines better than Delta Airlines. Stocks from anyone else?
Hey, Frank, how you doing? This is Al.
I
Can you
don't
take
know.
a
I
look?
don't. You know how I'm doing? I'm doing what I'm doing. Like, come on. I'm just kidding. You're so polite all the time. I'm doing fine. It could be better. Go ahead.
Can you take a look at Teledoc?
Yes, I have Teledoc, the cheap calls. Teledoc technically is completely fine. So what's going to happen? We're all going to rush into the doctor's office? I don't think so. So Teledoc, all Teledoc is doing after the massive move of the stock, I bought the 180 call. Somebody said 180 calls. You expect it to go to 180? I said no, because as long as the stock is moving towards 150, those 60, 70 cent calls are going to be worth $3, $4. So I don't want to be spending big money on Teledoc. I just want to speculate on it like I did many times before and made a lot of money. So Teledoc right now is here's your rising 34-day moving average. It punctured that and it basically just is retesting it. So I like Teledoc. It is getting very oversold. Look how oversold. When was the last time it got this oversold? Actually, I might put some real big money into this. 1 second. Last time it got oversold, the stock was 100. This was what the internals looked like. It is getting back to that level. Last time it was like this, the stock used to be 80. We used to trade this stock along this thing before it took off. So yes, the stock can go as low as 129. We have which is to retest the 50-day moving average. However, even if it goes down there, I will buy it, in which case I'll buy the 140 calls. Here I have the 180 calls, which are like 60, 70 cents, dirt cheap, and I believe it goes back to 150, 160. Now let me, does that answer your question?
Yes, thank you so much.
Now this is, in this case, we have the April 17th. I will have to move it out more, which will cost me a little bit more. So because April 17th is coming up next week. But Teladoc is a fast mover, and then this stock can move, just like the way we played Zoom today. It just shot up like a rocket, then pulled back a little bit towards the end of the day because some hedge fund sold a bunch. So that stock went real fast. We bought it at $1, $1.20. Stock went to 325. That's 200% of my money. I took a bunch out, left some in, bought more. So, and the stock closed at $2.10. So people ask me sometimes, like, these options don't move. Well, why don't you look at the chart? If the stock, you were the one who asked me a very good question, Aldi, about Anthem, didn't you? About the 360 calls?
No, that wasn't me.
Okay, it was somebody else. They asked me about the 360 call because, Frank, I have the 360 calls. They're doing nothing. There's a bid and ask of, I think it was Al Rivera. The bid and ask is like $0 to $2. What do I do? I said, you do nothing. You take that as a loss. It's a business loss. I explained that either on an advanced coaching session or last webinar. You have to take a business loss sometime. We're making money on lots of other things. This one is a business loss. Write it off. Don't look at it. Guess what those calls went today? They went to $2 from 0. Okay? So I had a bunch of them written off, like, okay, fine. I mean, it doesn't matter because Anthem, we're making crap. Anyone was in Anthem today playing that stock with me or for the last couple of days?
Yeah, the April 9, I wasn't there. Yeah.
You made some money on, Anthem? Anybody who didn't make money on Anthem should just right now, I'm not kidding, and this is between friends, slap themselves really hard. Okay, Bernie Sanders, the garbage guy, finally dropped out. Okay, those stocks were moving for a couple of days ago, and today they took off like a rocket before Bernie Sanders dropped out. Bernie Sanders always pisses on insurance companies. And I gave you guys the calls repeatedly. So please, honestly, I don't care how good looking you are as a trader and how you go away for your husband or your boyfriend thinks how good looking you are, slap yourself really hard. Anyone who did not play Anthem, Shopify, NOW, these power movers, should honestly be ashamed of yourself as a trader. I'm dead serious. And those stocks are going higher. And I'm not going to even Regeneron turning around. No excuses. Okay, seriously. All right, so here's Anthem. So options can be 0, and a day before they expire, which is tomorrow, they go up. They were literally 10 cents. I couldn't even sell them. I said, what the hell? Doesn't matter. I have like other things working. It's part of my overall P&L. I had a bunch of them. I sold them at close to $2. You don't even know what kind of profits there were. Okay? And you guys are sitting around twiddling your thumbs about whether you should buy Anthem or not. Did anyone even look at the chart of Anthem that I kept on showing for days and days? Okay, the answer I believe is a no.
Yeah. Yes.
Again, okay? So remember, it's not a spectator sport. These are power stocks. I have said to people, I like Anthem, and look at the chart. I've been telling you guys to buy the stock from 180, 170, literally, and then again at 200. I don't make up these stories. Very shameful, guys, very shameful. Seriously, very, very disappointed on this one with you guys. Terrible. So Anthem right now is hitting that gap that I told you it's going to hit. And that gap is 247 to 251. Does this chart really look like it's going to turn around and die? I don't think so. The stock is going to hit 256. That's another 9 points from here. It's almost there. And after it breaks 256, it's going to go to 280. Because this whole situation that happened with the virus and stuff, you think insurance companies are not going to help out and benefit also somewhat? as the government pumps big money into hospitals and insurance companies to protect the American people? Just use some fundamental logic, guys. You guys are all smart, much smarter than me, I'm sure, in real life. So wake up, all right? Anthem. Everything on the Twitter feed. If I showed you the options charts right now, your head would just go like spin. And I'm going to put it up on my Instagram. And please follow my Instagram because I don't see any of you going there liking any of the things. So thank you very much. So the same thing with Humana. Look at this. Monsters. Does this look like it went through a virus crisis? This looks like a normal pullback and move up. That's called a V-shaped recovery. A V that rips the heart out of the bears and eats it raw. Sounds pretty graphic, but hey, that's what it does. So again, Anthem, Humana, United Health. Keep buying them forever. Because when the day those companies, cash rich, fat balance sheets, health insurance companies that make America great, greater, die, we're dead. Okay? Don't overthink. Every time they dip really hard, technically speaking, buy them. What's going to happen? They're going to disappear? In which case, America's finished. Okay? So wake up and smell the coffee, guys. So this is going higher. Now, the calls are not like dirt cheap, neither are they expensive. And this is a beautiful, beautiful inverse head and shoulder, heading all the way to 360. The next one is United Health. And now that Bernie's gone, Bernie should get a haircut and a shave and just sit there, have a nice cigar in his main cottage and go fishing. Because supposedly he's still in the ballot. Yeah, such an idiot. Okay. So I do apologize. I'm sure some of you are Bernie supporters, so I don't want to offend any of you. And he's a good man. It's not like he's not a bad man, but he's never done anything for U.S. Congress or the Senate. Have you heard any bill that's what passed by Bernie Sanders that actually made a difference to the American public? Has anyone ever heard any bill that was passed called the Sanders bill? I don't think so, because he's done nothing in the Senate or the Congress other than open his big mouth. Okay. It's a fact, guys, nothing. And I'm from Boston, I should know. Okay, massive head and shoulders. United Health. So of course there's going to be resistance at this level. These are good looking charts, guys. Don't sit around, mess around. Buy them and they move 400%. Look at the ones I told you guys to buy. The 240s. They were up $10. They were up 230%. The one that came alive, okay, that was luck. I couldn't believe it. They were up at 1.1200%, and end of the day, they were up 700%. From 0 to 80 cents it went to. It was literally 0 if you tried to sell it yesterday. Shopify, another monster. Absolute monster. Now, these monsters I like a lot because they're real companies. This is Amazon Junior, told you guys to buy it at the bottom. Goldman Sachs downgraded the stock. Yeah, whoopee. I'm supposed to be very excited that Goldman Sachs downgraded the stock 3 days ago. That's exactly when the stock turned, by the way. Okay. And why do I like this? They have so much upside, so much upside. There are so many dotted lines here because these are all gaps. I showed this chart many, many times. Did some of you see it?
Yeah.
It's some of you, did some of you really look at the Shopify chart? Some of you really focus on the Shopify chart? And if you didn't, again, proceed to slap yourself before bed and do it quietly so your wife doesn't think like, or your husband, like what's going on. You should know it's just a trader technique Clueless Say Trading teaches us. No, I'm dead serious, guys. Stop being stupid. All right? I tell myself that all the time. Trust me, it's not you guys. I'm just telling you. So no offense meant to anybody. Stupid is good because once you're stupid, you can actually get clever. If you're too clever and smart, you can't get any smarter. You can get stupid again. So let's all be stupid and clueless and get better together. All right? This stock is going to 445, 470, 450. At least big gaps, all gaps. And Shopify is huge. So what are you scared about? You don't need great ideas in the market. I'm giving it to you. And then, of course, you have your great ideas like SPR that Z just gave me, and you can look at the airlines and that type of stuff. So what about this one? Etsy, I put it out today. I should have been trading Etsy like an idiot. I didn't trade it because it wasn't on my radar. Look at Etsy. You can still buy it here. And where's the stock going? I believe it's going to 56. I just need 4 or 5 points on it. I should have bought the crap out of Etsy at 34 just a few days ago. Massive. Because these are online companies which are making a crap load of money.
Frank, this is Z again. Can we also look at Trade Desk? It's the same category with Shopify as well.
Trade Desk and NOW. Now, Trade Desk has one issue. It is not in the same category. It is a software company. But what does Trade Desk do?
Their advertisement for
they are digital programmatic advertising. All these advertisements that you see on Google and stuff, these software programmatic artificial intelligence advertising, these are done by Trade Desk, TTD. Now, why do you think their business might be a little bit hard? Because a lot of small businesses are not advertising right now. Do you understand? That's the reason why the stock, even though it's gone from 136 to 207, you know, I love this company. I'm the first one who brought this company to all of you guys' attention many, many months ago. So bottom line is, I am not as keen on the stock as I am on the Shopifys of the world, which sells to the general public, and the general public is buying everything online, including face masks that Etsy is making, millions of them. They're making for the U.S. government. They told the suppliers to make it so they could, you know, sell it to the public or give it to the U.S. government. So I believe that if as we go into this, a lot of small businesses are not going to be advertising. So that is going to hurt their revenues.
Okay.
So, but technically, as a trader, sure, you can trade it. But I think the upside on Shopify and Etsy are far more than TTD, even though I love the pattern. And the stock can easily go to 237.
Okay. Can we also look at Crocs? I went in and out a couple times this week and past week.
Good looking chart. Crocs, good looking chart. So it's good. It's a good looking chart. There's an upper gap here at 29. I don't necessarily know. Stock's gone a lot, obviously, from the bottom on March. What is the major catalyst with Crocs? Like if you wear the Crocs, like you don't get viruses. You don't.
I don't know. Maybe the nurses wear them.
That's a very good point. That's a very smart point. Exactly. I have the original Crocs, 2 pairs. You know, the green ones, the really ugly green ones, and I think they're collector's item right now. You know, I haven't worn them in years when Crocs first came out. I actually have a Crocs sneakers. You know, the moccasins they made, the blue ones. Yeah. They're like Dockers, the ultimate shoes to wear. You can walk like 900 miles on it, and your feet doesn't do anything. So those are different. It's exciting. It doesn't excite me that much. I mean, it's good. It's a good looking chart. It's an inverse head and shoulder and all that stuff. But where's the real juice? So that one. Anyone else have any other stocks? Sue, you want me to look at anything? Ray, because El Nino.
I was going to ask about Teladoc, but I think Aldi already brought it up.
I already covered that. Yep. By the way, which one where'd you make the big fat return that you got on that? And congratulations on that, boss. Is which one did you make that on?
Oh, that was APT, I believe. Yeah, I sold it after it spiked like 50% in a day.
Which one?
Alpha Protec.
Oh, APT. Yes. And then it sold off. That stock is still in play. Those stocks are keepers, you know, because, you know, but the thing is they're a virus plays, right? So the coronavirus plays. So as the virus muddles down, the stock kind of settles in. The virus plays are not that hard. I'm down a bunch on VIR, but I like it because they are on the innovative side of coming up with the vaccines. The minute they announce something really positive, the stock is going to be at 40, if not 50. So I just left a couple of shares that I have alone in there. I just bought the common shares on that. So congratulations on that. Anyone else have anything? No? Okay.
Frank, one more, sorry.
Go ahead.
Go ahead. A quick look at Costco. They reported their March sales year over year. The stock dropped a little bit after hours.
Yeah,
I don't know if that means anything, but
I saw that. I saw that. Their comps were actually lower. Costco, like I said, Costco was also one of our bigger winners, even though it kind of like stayed around, did nothing on the third, and then took off like a monster on the sixth. The key is that sorry, you got to mute your phone. We're getting a lot of static. The key with Costco is there's nothing wrong with the stock whatsoever. I believe their sales are going to be very strong, even though they gave a slightly softer guidance. Costco, I believe it's good to enter. It's good to enter the 312, 320 area. Costco's a good looking chart. I have nothing against Costco. Home Depot's going nuts. Home Depot's going nuts. There's so many of these retailers, especially. Home Depot, I think, has a bigger potential higher, just so you know, because it hasn't moved that much. And I believe that, that's just my belief, is that the stock is going to go to 213. I'm looking at it from a trading standpoint. I believe the stock will kiss the 50-day moving average. That to me is beautiful, because that is 6 and 13. That's 19 points from here. I like Home Depot more. And Home Depot right now, with things stabilizing a little bit, people are rushing there to buy some nice flowers, some pots, some barbecues, just like so that even if they're stay at home, they can enjoy their own home. So this is a real stay at home play and a home modification play. So I believe Home Depot, I think, is a better bet. And technically speaking, the stock does not top out till it hits the 220 level, where it's the big downtrend line. So does that answer your
thanks, Greg.
question? Yeah. So
Yeah, that's great. And I was just wondering, Frank, you don't have to show a chart,
sure.
but I was just wondering what comes to the top of your mind when you think about this potentially $2 trillion infrastructure bill. What infrastructure play do you see maybe taking advantage of that?
Oh, good question. Well, the best way you take advantage of it is you buy companies like URI, which is the ultimate infrastructure play for not just oil and gas, but heavy cranes, all that stuff. So this is the stock you want to play. United Rentals.
Yep.
From an infrastructure standpoint, you can play Caterpillar from an infrastructure standpoint, which is huge. Wow, look at Caterpillar. Man, I'm missing a bunch of these. It's so tough to like track. So Caterpillar is another one. Look at that. Caterpillar is at 128. The high was 150. For God's sakes, the stock could go to 150 in a heartbeat. So infrastructure play, I'd look at Caterpillar. I would look at United Rentals, certainly. I would look at, let me see. I could look at CMI.
US Steel, do you
Yeah,
think US Steel is a good one?
Let me take a look at it. This is another one most people don't know about. They make on industrial generators and power machinery for electrical, for commercial and residential, but mostly commercial. Cummins engine. Look at the stock. It went from 101 to 49. Holy shit! Excuse me. Sorry. It went to 49% or 48% since the 23rd. Talk about infrastructure plays. So CMI, Caterpillar, URI. Guys can write this down or listen to this video. Let's take a look at US Steel. US Steel is such a dog with fleas. I mean, this stock doesn't even move. But even though it's actually a percentage-wise, it moved. It went from $4.54 to $6.76. I wouldn't care about US Steel. I would go after the ones which make me money. But this is a long-term play, US Steel, if it ever comes around. Remember, the steel industry has a lot of serious competition. So infrastructure or no infrastructure, the fact is that if you're a contractor with a big government project, you want the cheapest steel prices ever, right? So what is their pricing leverage? That's my question. You know what I'm saying? That's my question. Maybe that's why the chart looks so horrible. But I would, so I would look at those three. All right, ladies and gentlemen, it was great having you guys today. It was very comprehensive. Thank you. And please spread the word around. Let's get some good people in here. And you guys all get up and start freaking fighting, okay? Don't be scared anymore. The time to be scared is over. Time to be happy is over. Just make money, okay? Don't get too happy. Don't get too sad. Don't make excuses. Look at big movers. Options move on the $20, $30 movers, guys, all right? And the $2, $3 movers, of course. But the ones which give you that big fat smile at the end of the day are the ones which move 20, 30, 40 bucks. Stick to those. Now, I didn't cover the Apples, the Facebooks, and the Amazon and stuff here today, Netflix and all that. I showed you some different names in different areas because we can't have our hands in everything, right? So that's basically what it is. So God bless you all. Get some new blood in here, and let's get working, man. Let's get working. It's going to be very tricky going forward. It's not easy. It is not easy. All right. Expect massive moves up and down. Just when you think it's all over, it's going to turn up, and just when you think it's always going up, it's going to crash. But the charts will speak the truth. Focus on them. Have a great evening. God bless you all, and please stay safe.
Thank you, you too.